Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 29th of May. I'm Daniel Lam, your host for the podcast. Since the Liberation Day, there's a clear pattern from the Trump administration to be, quote-unquote, slamming down, eyeball-grabbing tariff headlines, only to scale back or giving temporary reliefs. We've seen his rhetoric with China and more recently with the EU. And because of this, US equities have been on an uptrend for the last 6 weeks. When would this uptrend meet resistance? Well, psychologically, the post-drawdown peak should exceed the initial peak slightly. Why? Well, usually as the index approaches the peak, you will see many investors getting in to chase the market. And then when it gets sold off, many will be holding on to their stocks and hoping that the markets will turn. So the market manages to break that peak level again, you would expect heavy selling from those that have held on to their stocks because they've achieved, quote-unquote, break even. That means this time around, S&P 500 can just exceed the previous peak at 6,148, and the likely psychological level would be around 6,200. Incidentally, that level is similar to what historical analysis suggests, based upon the current level of US equity positioning. It is reasonable to assume that the positioning would become at least neutral for profit takers to come in. What about the flow side of things? Well, in the near term, we see CTAs and retail on the long side, and the month-end rebalancing into bonds, and the sell America or rotational flow into other regions on the selling side. On the balance, CTA's flow would be marginal buyers of equities on the grind higher, as long as S&P 500 does not break the key support level at 5,700. Now, this path to 6,200 can be a relatively short time horizon. How would US equities propel higher from that point? Well, we need to see two things. First of all, more conclusions of trade deals, and also relatively resilient hard data from the US. Economic data is a check and balance on how far the Trump administration would go in the trade war. They have the quote-unquote valve to tone down the rhetorics of the tariff when necessary, the so-called Trump put. This will be utilized if there were to be deterioration again in market sentiment. That is all from me for today. As always, if you enjoyed this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.